Do Money Differently podcast is brought to you by Acorns. I've been using Acorns as one of my investment accounts for several years now. It's ridiculously easy to use. Imagine every time you pay for a latte or hit up the drive-thru and your spare change is silently working in the background, turning your pocket change into ownership of great stocks of the companies you likely do business with every single day. You can also set up weekly or monthly recurring investments with Acorns, which puts your wealth creation on autopilot. Be sure to click the link below in the description of this episode so you can get a $40 bonus when you open up your first Acorns investment account. You'll be happy you started your new investing journey with Acorns. Welcome to Do Money Differently, the podcast where we break the chains of conventional finance and forge our own paths to wealth. I'm your host, Todd Romer, here to guide you through the jungle of jargon and show you that you have the power to transform your financial destiny. Each week, we tackle money myths, take on challenges, and learn from top financial minds, including the one we have today. So you can rebel against the norm and make smarter, bolder money moves. Excited about this particular episode of Do Money Differently, which is also sponsored by Acorns. Acorns is a wonderful place to begin your investing journey, and I'm actually an Acorns user as well. All right, I want to welcome Alex Witt as my guest. Alex is a financial planner with a company called Prosperian. I've known Alex for a long time, and you're in for a treat to hear him share what he does and sees out there amongst young people and what they're doing with money, the needs that they have, and what he uniquely does to help these young individuals achieve a better life. Welcome to Do Money Differently, Alex Witt.
Thanks for having me on, Todd. Looking forward to it.
Absolutely. Your LinkedIn description out of the gate says you, quote, help high-performing individuals and families create life-changing wealth. I mean, who wouldn't want to be one of your clients after seeing that and hearing that, right?
Yeah, it's a powerful title, but I do think the work that we do can be extremely impactful for our clients, and then it has the downfield effect of being able to impact generations and generations to come. So we've all unfortunately heard the stories of family members who didn't manage their personal finances well, and it creates a headache for kids and grandkids down the road. And a lot of our clients and a lot of my clients, as we'll spend time on today, Todd, is a lot of people in their 20s and 30s with decades and decades ahead of them and doing a lot of the basics and foundational things early on in your career, compound interest and compound growth better than most. But doing these things early on in your career is extremely impactful and can be life-changing, as I say. So yeah, looking forward to diving into it. Yeah.
You know what's great is that it didn't say I help high-performing individuals that are super and have to be super intelligent, super smart. It doesn't say that, right? I mean, that's the big myth.
As we'll talk about here, it runs the gamut in terms of our clientele, and a lot of the conversations are transferable, depending on if you make 30,000 of income or 300,000 of income, and anywhere in between. So we'll talk through all that today.
That's awesome.
Yeah,
great.
Yeah.
Fantastic. Okay, as we do with all of our guests on Do Money Differently, I've got to ask you before we get into the conversational interview with you, just give me your dumbest money move and your smartest money move between the age of 18 and 25.
18 and 25.
You're much older. How old are you? You're actually how old though?
I'm 30 years old, so I'll go 18 to 26 because the one that was coming to my mind was during COVID in 2020. So
is this the dumb or smart one?
Both actually. Yeah. So it's
all right. We're gonna go with both. All right.
Yeah. Actually, the dumb move was investing in Peloton stock and thinking that everyone's gonna stay at home for the rest of their eternity, and buying that when it was on its high end of the stock charts. And then the opposite was actually sort of a similar theme, was buying a company called Vail Resorts, which I don't know if you have any skiing fans out there, but they
Absolutely.
run a lot of the top ski resorts. So in the depth of COVID, looked like the world was ending. And that's actually a good financial tip, is when it looks like the world's ending, then if we won't be around here to see it, then that happens. And if we are here to see it, then have a glass half full optimistic view, and things will naturally turn out pretty well. So those are the main two that came out during that time period. Yeah.
That's great. That's
Yeah.
great. Yeah. COVID had a lot of opportunities, right?
Yep. If you had the
Boy,
time
fear is
horizon.
high,
Yeah.
as we
Yep.
all know.
Yep.
And then as the stock market always does, it says, well, I'm on sale. Like, I'm really on sale for those who really want to jump on. So we talk about that too. Okay.
Yep.
Thank you for sharing your dumbest money move and your smartest money move when you were young. And okay, so at your age 30, and our listeners and viewers, I love that, because uh, you're you're not very, quote, old at all,
No.
and you're helping young people who this may actually help people go, wait a minute, I want to do what Alex does too,
Yeah.
become a financial planner. And we, in our speaking, during our speaking tour, we do have some people that go, yeah, I'd love to help people. I love to do what you do, but also maybe even become an advisor. So who
Yeah.
knows? But let me read some of your recent LinkedIn posts that are pretty fresh. I'm sorry, you're gonna maybe get a big head after I say this, but I like to tell people the truth. You tell people the facts and the truth. You're a good writer. Whether that takes you days to write things or not, I have no idea. But you're a very good writer on LinkedIn. I highly recommend people to check out your LinkedIn posts, because they're thought provoking when it comes to money. So here's what you recently posted. One of two. You put, "Who wants to be a millionaire?" And obviously that evokes like, wait, what did he just say? Okay, I do. Um, and you talk about the future value of money. You talk about if you're paid every 2 weeks, which most people are from their employer, that ends up being two extra paychecks a year. So if you're budgeting, most people budget based on, quote, two paychecks per month. Well, you got these two bonus paychecks. And sometimes that can lead to some, hey, I got a pot of gold and let's go spend money out of the gate. But you talk about, hold on. So just speak to that post where
Yeah.
you get those two extra paychecks a year,
Yeah.
for a moment. Feel free to have
Yeah,
at
we
it.
spend a lot of time with clients identifying what we call cash flow triggers throughout the year, and just life events where they have various different triggers. So whether it's raises or bonuses, or what you were just talking to Todd around, like 26 paychecks versus 24 paychecks, we always want to be in people's world, helping them quarterback cash flow. And I think that's the biggest, most important thing for your listeners, is being really honed in on month to month cash flow, whether it's what's coming in or what's going out, and then anything in between, which we call free cash flow, or what you can go allocate to savings, investments, debt pay down, all those sorts of things. So Todd, I'm sure you've heard the term lifestyle creep, but I'd say it's one of the biggest things for our clients early on in their career. Is ideally they're in a career path where they're getting those raises and promotions every few years, and they're on an upward trajectory as it relates to compensation and income. So what we try to do is develop a process, which we call the wealth building account process, where they deposit their paychecks into an account with us, and we spit out a targeted monthly expense allocation or a budget on a month-to-month basis, and then anything in between we look to go save. So that post specifically, Todd, is just a great little savings hack, is those 3 paycheck months. Most people live their life on a month-to-month basis, whether it's rent, mortgage, student loans, car payments, all those sorts of things, making sure that we're saving that extra paycheck and not spending it. And there's other other great examples around this as well. So tax returns and tax refunds, for example, you always hear the advertisements on the radio of like, use your tax return and come go buy a new car, or things like that. It's essentially that consumer mindset that always is pushing us to go spend more and spend more. And what we try to develop is, okay, let's be thoughtful around this. We call it conscious consumption versus unconscious savings. And how do we set up just automated savings as much as possible for a lot of our clients? So that was that specific post. And then other areas, things like when you get a raise, making sure that you're just setting up an auto transfer into an investment account, for example, for that incremental raise that's coming home every single month is a great one. Other areas in times of the year, things like if you stop paying into Social Security once you make a certain amount of income for the year and things like that. So debt pay down is another one, say paying off a student loan or paying off car loans. Say you have a $300 a month car loan, recapturing that and pushing that towards something like an investment account. So little things like that do add up over a long period. That's post specifically Todd just talked about. If you bank those two paychecks, assume a 7% rate of return over the long term, you can theoretically go be a millionaire. So
yeah, for sure. Through the power of compounding, which requires no intelligence, right?
Yeah, it's beautiful. Eighth
Love
wonder
it.
of the world. Yeah.
It is.
Yeah.
It is. So, yeah, it's great. I've kind of shared with you that over the last year or so, Young Money University Financial Rebellion, which is our new newsletter name, coming out in about 6 to 7 weeks, and even a book coming out later on this summer, late summer, called Financial Rebellion. Just how money doing its thing, automated, and letting yourself step away from yourself. And you even said there how you, with Prosperian, you even take some of your clients' paychecks and divvy it out for them instead of them doing it themselves, right? Which is kind of cool. That's one way to get people out of the way themselves, right?
Yeah. Yeah, and we joke that if you see money in your checking account, you find ways to spend it. So having that behavioral finance element is the checking account is where money goes to die, is what I tell people. So making sure that you're structured around how much is in checking, how much is in savings, how much is in the sub accounts within a savings account, and then ultimately investing or paying down debt as well. So
yeah, that's great. All right, your second and final discussion of your LinkedIn post that I thought was great, actually made me laugh, and I have a story behind it, is you said, quote, "Are you managing your personal finances like the Cincinnati Bengals are managing their roster?" And for those who don't know, I'm sure most of you do, NFL team Cincinnati Bengals, flashy weapons everywhere, but major gaps everywhere else. I love this. Are you managing your personal finances like the Cincinnati Bengals? And so why I laughed is because a few weeks ago, I said to my Cincinnati Bengals friend group on a text coming up with it, before the NFL draft, which has already happened a week ago. But I said, hey, you signed, correct me if I'm wrong, the second receiver you have is T. Higgins, right?
correct. Yes.
So T. Higgins and Jamar Chase, and you signed them to a boatload of money, and you have a wonderful quarterback. There's no question about that in Joe Burrow. And I said, hey, that's great. Guess what? Every game this fall, the Cincinnati Bengals 49 and the opposing team 51 because of the lack of defense. So anyway, speaking to that, just talk about that. Again, flashy weapons everywhere, about the Bengals and people's money situations.
Yeah, I'll actually approach it from two different angles, Todd. One is the first is focusing on the more fun stuff, the more offensive stuff, and then leaving yourself exposed if things do go wrong or things don't go your way. So a lot of people like to focus on, I invested in Apple in 2019, or they like to talk about all the crypto that they own, for example, but they don't talk about the building blocks and the boring stuff that is super, super important. So in our planning process, we spend a lot of time talking about savings rate versus rate of return. And for your listeners in their 20s and 30s, that's really going to be the needle moving thing early on in your career, is focusing on how much you can save versus what the rate of return that you're earning on your investments. So that's one example. Things like insurance. Everyone loves talking about insurance, everyone's favorite thing in the world. No, I'm kidding. But it is important whether it's a health event or renter's insurance policy, if there's a flood in your apartment building, or car insurance, all those sorts of things. And also related to that is making sure you have an emergency fund for emergencies when they come up, making sure there's no bad debt. Anything with high single digit, double digit sort of interest rates is, I would consider, to be bad debt out there. So making sure that you're tackling that stuff first before we go and focus on the more flashy stuff. So that's one part of it. And then the second as well is, a lot of people, there's a great book. If I was to recommend one book, Todd, it'd be The Psychology of Money by Morgan Housel.
Yeah.
Fantastic, and speaks to people's perception around money. And essentially one of the chapters in there talks about one of the short stories is having a fancy car, but then the rest of your financial life is an absolute mess and an absolute wreck. I'm sure we've all seen similar sort of TikToks and Instagram posts to that effect as well. So just making sure that you're being humble around money, you have good values. We always talk about that money is a magnifying glass on your heart, and just making sure you have a good head on your shoulders around money. So that's a lot of our planning process, is what's important around money to you. What do you value? What do you want to make sure that we're saving up for and planning for? So speaking to having flashy weapons and things, but the rest of the house not being in order, that's something that comes to mind on that topic as well.
Yeah. Love it.
Yeah.
Love it. Great stuff.
Yeah.
That's why a lot of what our mission is with YMU and Financial Rebellion is lined with what you do. Heck, one of my sons is your client, and possibly, who knows, maybe a second one will be a client of yours, and they're both in their 20s. So, all right, last question before we kind of get into some money challenge of the week and financial Q&A from a listener is, I mean, a day in the life of what you do. What's the best thing? Tell me a little bit more about a day in the life of what you do, helping people, but what's the best thing? And also, what's the best thing you like about what you do
Yeah,
as a
it's
financial planner?
wide ranging topic, so I'll try to distill it in the most
Yeah.
succinct way possible. So
Yeah.
just as backgrounds, I graduated from Ohio State University, went out to New York, and worked in investment research for the first 4 years of my career, and then pivoted and now work with our firm Prosperian Wealth Management for the last 4 years. So a lot of my work is with what I call the Henrys, or high earners, not rich yet of the world, but there's no strict and hard and fast minimums to work with us. So a lot of our clients are in their late 20s to early to mid 30s. It's a lot of folks who have got out of college for 5 to 10 years. They're starting to see that inflection point as it relates to their career. They've gotten past some of the more blocking and tackling aspects of their financial planning, whether it's paying down debt or building up some savings and liquidity outside of a 401k. And they're starting to hit a point in their life where they're planning for certain life events, whether it's getting engaged, married, starting a family, buying a house, all those sorts of big planning items. And speaking to that as well, like consolidating finances once you get married and things like that. So a lot of my day to day is working within that contingent or more niche target market per se of people who are at that point in their career. They have decades and decades ahead of them from a savings and investment standpoint, and they want to make sure that they're doing the right things early on. So on a day-to-day, it is all things from reading up and researching, whether it's various different news articles or what's happening in the markets on a day-to-day basis. I spend a lot of time in client meetings. I have about 10 to 15 client meetings per week, and it's anywhere from a new client coming on board whereby we're sitting down and saying, okay, where do you want to be in 3 to 5 years? What's the current financial picture? Let's project out and build out a whole savings plan and an expense plan around what's coming up in the next few years and how we go get from point A to point B in the coming years. So, and then all sorts of conversations around building out a savings process. So getting really honed in on what's coming in and what's going out, as we were talking about earlier, figuring out where we go allocate that, whether it's 401ks, HSAs, other benefits through work, investment accounts, Roth IRAs, things like that. And then also things like benefits through work, benefit elections, thinking through home purchase analysis, thinking through planning for kids and starting a family, how that's going to change the overall financial picture. So it's a long-winded way of saying every day is different, Todd, and it'll depend. I mean, just over the last month, we've had an incredible market volatility that has driven a lot of client conversations around, okay, are we invested appropriately? Do we need to go make any adjustments? Is everything still on track with how we're thinking through the next few years? And a lot of conversations are just reaffirming the plan and having a second set of eyes. We joke that we're your personal CFO. Is what happens when you hire us, is you have someone in your corner to bounce ideas off of and make sure that you're doing all the right things, and also as someone to challenge you as it relates to your personal finances. So it's a riveting career. It's a lot of fun. It's always changing, and as I think about it as well, Todd, my practice is more entrepreneurial than the average day to day. So I'm always out there prospecting, meeting with new clients, servicing existing clients, and over time trying to build a really cool business that I can grow and scale with and partner with people over the next 10, 20, 30 years. So that's how I think about it.
That's fantastic. I love what you. I mean, everything was great. What you said. I love that it's entrepreneurial, and this
Yeah.
is what our readers are intrigued by as well.
Yeah.
Give me some ideas of becoming an entrepreneur. Well, how about it being a financial planner and helping people take over their money stuff so they can help them long term? So that's fun.
Yeah. Yeah, and
Great. All
Todd,
right,
just
we are
on
gonna.
that note
Yeah.
as well, like you would think that a lot of people, money's sort of a taboo topic out there, but more behind the scenes, everyone struggles with money, even the highest of earners out there. That money is a common stressor in people's life. It's one of those things that most people don't like to think about it, and for that reason, they go hire someone like myself to take it off their plate. Even I have a lot of clients who work in the business world and the finance world, and they're just like, Alex, this is the last thing that I want to think about on the weekends when I have a whole family to tend to and a wife and kids, and I want to go be doing more fun stuff rather than nerding out on different tax strategies and figuring out my benefits elections and things like that. So it's a really cool. Will always be in demand sort of career, and you also get to help people at the end of the day, which is really super rewarding for me and how I think about the long term. So
That's fantastic. It's like a
yeah,
cardiologist saying, you know what, I need to see a cardiologist instead of me figuring
exactly.
out my own heart stuff. Yeah, that's great.
Yeah,
Thank you for that. All right, we're going to get into the last few minutes here before we close out this episode of Do Money Differently, brought to you by Acorns, is the Financial Rebellion Challenge. And this is simply tracking your expenses for 1 week. So for all listeners, this is we teach a lot of money stuff, one step at a time, from helping you dream, save, spend, invest, and give money differently to have a really fun and purposeful life. But when it comes to the spending piece, this is about simply starting to be aware of where your money is spent. Kind of like you were saying, Alex, conscious consumption. We call it intentional spending. It's the same thing. So here's what the challenges of the week for our listeners. Just grab a notebook or use the notes section of your phone on your app, the phone notes app on your phone, and just record every expense for 1 week. Instead of telling you, hey, do it for a month can be overwhelming out of the gate. Just start for a week. And that's every purchase you make, whether that's gas at a gas station, entertainment, food, fast food, even if there's a fixed expense in there like rent or utilities, car payment, just track it all just for 1 week. And then what you may find is you're going to become very aware, like, oh, I spent money on this. And ask yourself, was that necessary? Were all those purchases necessary? And all this is going to do, to summarize this challenge of the week, tracking your expenses just for 1 week, is just becoming uber aware okay, these are some tendencies I have that maybe weren't necessary to spend. And then we always tell you to go back to your why, your dreams. Were those necessary to get to your bigger dreams? And finally, we always have fun with this on the speaking tour. There's not one person, Alex, that we've talked to around the country that says, man, you know what? One of my dreams and whys are, one of my whys is I want to go to Chick-fil-A 6 out of 7 days a week. We just don't hear that. We don't hear that as a big dream or a why.
Yeah.
It's bigger things. So that's the challenge of the week. Just track your expenses for 1 week and just ask yourself, was that necessary? All right, now we're moving on to the listener Q&A before our closing thoughts. This is a question from Stephen. Stephen says, I have $2,500 in my one savings account, and I want to create at least 3, maybe 4 named savings accounts that you teach. So how do I divide that $2,500 up, he says. So my response is simply this. Create those 3 or 4 named accounts that line up initially with what you need in the next 5 years or less. Some of you have said all over the country that, okay, I definitely want to buy, I need to buy a car. So a car savings account, create one of those. Maybe you take that $2,500, divide it by 3 and put it into your new car savings account. Or if you own a car and you're fine with it, have that car repair savings account, put a third in there, because Alex and I both know you're going to have an issue. And that's where people get stuck with these $2,300, $1,400 car repair bills out of the blue. That causes a cycle of stress. And so that could be one of them. It could be a travel savings account if you really value travel, or clothes and shoes, or education savings account. Just divvy it out into 3 or 4 different named savings accounts, and then begin your automation into those named savings accounts the next month and thereafter. So that's what I would tell you to do, Stephen, of how to deal with your $2,500 in one savings account, getting it out into these new named savings accounts that line up with your life, of what you need and what you value. All right. Closing thoughts. You've heard some pretty cool insight from our guest, Alex Witt from Prosperian Wealth Management. Tell us how our listeners can reach you if they want to know more about your services and potentially looking at maybe becoming a client of yours. How can they reach you, Alex?
Yeah, for sure. I'd say two ways. First being the easiest, our website, prosperianwealth.com, is our company website. Learn a little bit more about our team and the role that we play for folks, but clicking on my profile, you'll see all my contact in there. So it's prosperianwealth.com. And then also, Todd, to your point earlier, I like to be pretty active on LinkedIn, at least a post a week. So encourage you to follow me on there, and hopefully you can pick up some little tidbits and nuggets that can help your personal financial situation. So, yeah.
Great.
Yep.
Yeah, your content's fantastic on LinkedIn. All right, to stay connected on what we're doing at Young Money University, Do Money Differently, and our new Financial Rebellion newsletter coming out in a few weeks. You can still subscribe at youngmoneyuniversity.com to our free digital newsletter, currently called Do Money Differently, but we're making a big name change in a few weeks to Financial Rebellion, and we'd love to have you there as well. So for now, have a great rest of the day and your rest of the week, everyone. Thanks for listening to Do Money Differently.